Good afternoon. Jeremy Martin here and Simon Retta from Horizonte. Thank you all very much for coming on the call. And we'd like to give you a quick update on where the company's at and also sort of talk over the last 48 hours in the market. So we obviously released the feasibility study on Monday. The company is extremely pleased with the results of the study. Based on the long-term nickel price of $14,000 a ton, which is well below market consensus. The project delivers a 400 million NPV, a 20% IRR, capital cost of $440 million, and importantly, the C1 cash cost, i.e. the cost of actually producing, is $8,190 a ton. And that places the Araguaia project in the lower quartile of all nickel laterite operations worldwide. If you then flex that nickel price to the consensus average, that NPV goes from 400 million up to 740 million. And the IRR is 28%. So it is highly geared to nickel price. And equally, if you take that down to $12,000 a ton, you've still got around a 14 or 15% IRR with an all-in break-even of around $10,000 a ton. So overall, this is an extremely robust study. It's also designed as a scalable scenario. So the feasibility links to stage one, which produces 14,500 tons of nickel a year. But the process plant has been designed to allow you to scale that and put a second line in, and that would take nickel production up to 29,000 tons, and that would be a sizable nickel operation globally today. I think if we look at the market over the last 48 hours, it's obviously extremely frustrating. We're very disappointed with the reaction to the feasibility study. I think there are a couple of factors that we can point to. One, obviously, when we opened trading on Monday, nickel price had dropped below 12,000. It was, I think, 11,400. And yet the year-to-date average on nickel is 13,600, which is very close to our long-term price. I think what needs to be remembered is this is not going to come online until 2021, 2022. So we're not looking at the nickel price today. And across all of the banks, the price forecasters, industrial producers, 14,000 is a conservative mid-term price to use. Obviously, we had a big day of trading, downward trading yesterday. We have seen all of our major shareholders. All of those shareholders are on board, and actually some of those groups have been in the market buying and supporting the position. And we've also been out generally marketing the story to new groups, new investors, which has been very well received. In terms of where we're at, it has been a tough market. I think the AIM mining index year to date is down around 60%. And up until Monday, I think we'd weathered that. And I think also there was concern out there that the capital cost had increased beyond what the pre-feasibility study was. We believe we've given fairly good guidance over the last 18 months that obviously that capital cost was going to increase. The pre-feasibility number is now 3 years old. There's been 10 to 15% cost inflation in the mining space. And also one of the power lines that we were going to use in the pre-feasibility that was only 12 kilometers from the project, which was under construction 3 years ago, the company actually went into liquidation, which meant we had to have a power line that now is running for 120 kilometers, and that's approximately another 30 to 40 million. And I think it's also worth mentioning that in that 440 million capital cost, there is a 17% contingency, which is close to $60 million. That's a very conservative number for a feasibility of this size. Most companies you'll see running at 11 or 12. So going to the next phase, it is likely that that number will come down as greater engineering definition is built into it. It's also worth noting there was questions about, well, should we be buying at 2.5? We're saying, well, people were buying this at 4. Even at that low-end nickel price, there's a couple of $100 million on NPV. and that's without even applying any value to Vermelho, and Vermelho is effectively another Araguaia, if not more. And that's part of what we're going to be putting into the market, that this is not just a single mine to produce 14 or 30,000 tons. This is a district that we could effectively scale up to 50 or 60,000 tons. So our next steps, we announced Endeavour. We're very pleased to be working with Endeavour on the debt financing. Their last deal was the Lundin Gold project, where they raised $700 million for that. And we will effectively work through now a number of scenarios with the aim of coming up with a project finance package mid next year to allow us to build and develop this asset. The company's funded today, so I think that was another concern, that we were sort of going to dip into the market and raise money on the back of the feasibility. That's not the case. Last reported cash position was 8 million sterling. So the company, in all aspects, is in very good health. Number one, strong cash position. Number two, a robust feasibility study around Araguaia. We've got a number of major milestones to come out over the next 6 months. The first one being the scoping study. Hello? Sorry. The first milestone being the scoping study around the second line on Araguaia, which should be out by the end of the year. Then we're waiting on the award of the construction license, which should be later this year, early next year. Then there's the PEA around Vermelho, the battery test work. So there's going to be lots of news around this as we move into the middle of next year. I think that's the high-level summary for me, and happy to open up to questions to Simon and I.
Okay, thanks, Jeremy. I think that was just someone joining late to the call, so I had to place them on mute. But if anyone wants to ask a question, then it's #1 to unmute your line. And what I'll try and do is, once you've done that, I'll try and remute you after it, or you can just do #1 to remute yourself. That would be helpful for the noise on the call. But just before someone does ask a question, I would like to ask a question. And so, Jeremy, I was pretty pleased with the feasibility study numbers, actually, and I've used that useful MPV calculator on the website as well. And the reason I was pleased with it personally was I knew sort of CapEx would go up. You had given guidance around that anyway, so I think we all knew that was going to happen. I think other miners, such as AsiaMet, will experience the same issues. But I'm a long-term nickel bull, so for me, this is a longer-term investment, and I see the sort of the scalability side of it. And I suppose one of the questions I'm interested in, because I'm focusing now on the second RKEF plant, is given that you're going to be building the first RKEF plant with a 14,500 tonnes per annum, project, do you see that you'll potentially make significant CapEx savings on the second implementation, given the fact that it can, leverage power, water, etc., etc.?
Yeah. So it's Simon here.
Yep.
We're working on the scoping study at the moment, so I can't tell you the results of that. But we estimate that a sensible number for the CapEx would be significantly less than double what we're at the moment. I can't tell you exactly. So it's not going to be a $900 million CapEx for twice the capacity. It will be.
No, I think if you rightly explain that, Darren, things like the power line, the slag facility, all of the fixed infrastructure is in. So if you look at stage one being 440 million, it will be a significantly lower number than that.
Yeah, and that's what attracts me most, I think, is because I think as we've, I think as you've mentioned before with the Onca Puma purchase, which happened post-feasibility, I think majors would be pretty interested in a project of that scale, something up around about the sort of, 25 to 30,000 tonnes per annum. So it would probably be coming more on their radars when you've done this second PEA, I would have thought, if the numbers stack up.
Absolutely, and also into that building a scalable nickel business. So there's an interesting slide on the presentation. I think it's slide 28 off the top of my head.
Yeah.
And that's just showing now, we don't just have a single asset in the company, i.e. Araguaia. We've now got Vermelho in the north of the district. And if you look at that slide, the way we see this rolling out is Araguaia stage 1 and stage 2 to give you 29,000 tonnes of nickel. And then plants at Vermelho stage 1 and stage 2 So you could very easily see 50 to 60,000 tons of nickel being produced from this district. And it's just worth reminding that Araguaia on its own is 120 million tons of resource. Araguaia North, which is the Glencore project, is around 100 to 120 million tons of resource. And that was going to be a 40,000 ton a year operation that Xstrata were going to build there. And then Vermelho on its own was going to produce 40 to 46,000 tons of nickel. So this isn't, we're not sort of pushing the envelope here. This is infinitely achievable.
As a one-off, yeah.
Okay. All right, fine. So that's my only question. So just to anyone on the call that wants to ask a question, if you've unmuted, could you please make sure that you do mute back after, otherwise we'll get a lot of background noise like we just got. Thank you very much. Okay, so over to anyone else. Just a reminder, it's #1 to unmute your phone.
Well, I had a quick question regarding the C1 costs, and I was wondering, do those include anything to do with interest on finance and this sort of thing, or would that need added on, and what sort of effect would that have on the cost of producing the nickel?
No, so this model is based on cent equity only, so it hasn't modelled in any financing scenarios, and that's just the way that feasibility studies are done, because you're going into financing conversations, discussions, so generally you present it as an equity-only model. Therefore, there's no interest or any cost of capital in the C1 cost. It's purely cash costs to extract a ton of nickel on an average over the life of the mine.
That's great. Thanks very much for the answer.
So if you go into the leverage scenarios, obviously returns will increase for equity holders, but I can't tell you how exactly that would impact on a net interest versus IRR basis, other than it's generally quite positive for equity holders when you leverage up. Any more questions?
Hello.
Hello.
Hi. I just have a question about Lombard Odier, who recently have obviously sold down quite a lot. On the 16th of October, they had a TR1, TR1 notification about going below 5%, I think it was, of their holding. And I can see on your website it's showing 4.9%, but there's a lot of suspicion that they're probably still selling down quite heavily. That might be partly responsible for why the share price sort of crashed so dramatically the past couple of days. Do you have any insight into what's going on with Lombard Odier, whether they're kind of fully going to clear out their stock or what?
I think that's been one of my challenges for the last 6 months. Correct. If we went back to Q1, Q2 this year, Lombard was sitting at around 8.5%, 9%. They've obviously sold down over that period to a declared position today of 4.9. I mean, I obviously speak regularly to Lombard. They are not a seller in the market today. Equally, we have to remember they are a fund manager. Their entry point is probably getting somewhere towards a level lower than the market today. I think it's a difficult question to answer, and unfortunately not one I can give complete clarity on. I will be seeing them next week, and my position there is, look, if you need to exit, let us work with you and find a buyer to remove this position, rather than it being a constant overhang in the market. If you're not a seller, let's make sure that this position stays out of the market.
Okay, thank you.
Another quick question regarding Lombard. Will they have another TR1, or with them being an institution, is the 5% the last TR1 that they need to actually send out?
My understanding is that they have to announce down to 3%, but I would need to confirm that with the AIM rules to give you anything cast iron, because sometimes it's 5 but I thought that was for overseas issuers or overseas funds. So it depends how they've got it structured. If they're based in like Cayman or something, then it might be 5%, but if it's UK, then I think it's 3%.
That's great. Thank you.
Any more questions? Just #1 to unmute your phone.
Just a quick question on development finance. You said in the announcement this morning that you were confident in your ability to raise the development finance for the project, which is obviously helpful. But I just wondered if you can give a bit more colour around what gives you the confidence around funding the stage 1 at this time.
Yeah, a good question. I think what gives us the confidence that there is appetite out there to fund this is a number of things. One, there are very few nickel projects that are effectively development ready in the world today. And any one of the mining funds or the private equity groups that you speak to, nickel is in their top 4 commodities that they want to get exposure to. They've got a lot of copper, they've got a lot of gold, and they want to get exposure to nickel. So I think there's appetite from the private equity and the mining finance arena. Then I think if we look at the nickel producers, again, the nickel producers that want to expand or groups that want to enter the nickel space, there is a very limited amount of advanced options that work at the right cost point. So I think all the indications are positive. I think the challenge that we face at the moment is the challenge we've seen over the last 48 hours, that we need to see nickel price coming back up again. And there's an interesting graph in the presentation which just shows the LME stocks have hit their lowest level in 5 years, and the price was doing a nice inflection and moving up, and then we had the China US trade tariff issue. I think until that's resolved and we start to see inflows of capital into the space again, it's going to be challenging. And I think what will dictate how quickly this happens is how quickly we see that recovery and interest.
And thank you for that. And do you see a potential for tapping existing shareholders on a rights issue type basis for at least part of the financing?
Yeah, I think that's an option. I mean, you've obviously got to look at the size of each institution. I mean, JP Morgan appears regularly in project finance transactions. Some of the other names equally, I mean, Canaccord likewise appears on a number of project finance transactions. Glencore could sit on either or both sides of the coin, both on the equity and on the offtake. And Tech again could sit on the equity side. So I think there is definitely potential amongst that group. I think we need to bring another 2 or 3 straight institutional equity names onto the register at the right point in time, and there's a number of those names out there. So I think if you look at our register versus the peer group, we've got a good selection of names on there, all who are capable of being part of that bigger project finance package. The question is, do they want to be, and do they want to be at this point in the cycle? That's the question.
Thank you.
Another one from me, Jeremy. If there's an equity component to some of the financing side of it, what's your strategy for trying to get market cap increase? Because obviously that's something that would benefit those discussions and that financing type.
Yeah, I think this is the. I mean, we stepping back. I mean, this is the big challenge with all of these companies that are looking to raise project financing, where you have a shrinking market cap versus the target of the raise. And what we've seen in the last 48 hours hasn't been helpful on that journey. So first of all, we've got to rebuild and start lifting that share price. How's that done? That's through positive sentiment in the market and feeding out the right milestones into the market. So we've got the milestones. The challenge at the moment is if you create liquidity windows, as we saw on Monday and Tuesday, it was a window for people to trade out of. So we need to be conscious that it's going to be. I think we've got all the milestones, and another big one will be the construction license. But equally, we just need to see some positivity return to the mining space.
It's Simon here. It's also worth noting that issuing equity from the PLC is not the only route to financing the equity component of the project. There are options to finance at the entity level in Brazil. A lot of people would prefer that rather than taking equity in a PLC. So that's something that we'll consider as well. And with our financial advisors, we're going to explore all structures and options which will create the most value for the PLC.
And you've also got the option of using Vermelho to leverage against Araguaia. So we have a lot of different angles to look at it. It's not as if we've just got one asset and one way forwards.
Yeah. I think the thing is Nick. I mean, if you know, I said this to a few people the other day when the share price was dropping. And people have very short memory. I mean, it was only 3 months ago that nickel was at $15,500 a ton. I don't know if there's anything behind this story, but there was some article I saw that was saying something about a lot of the LME stock drawdown was strategic and being stockpiled in Holland. And I'm not sure whether that's true or not, but I still think that there's obviously the robust demand going forwards anyway. So I don't know whether you heard that story or you had any views on that.
Yeah, I think there was some commentary about it moving off market, as you say, to Holland, and whether that was happening. I think it wasn't a significant amount of tonnage, but either or, we've seen a drawdown from 500,000 tons in January 16 to 230,000 tons today. The average nickel price year to date is 13,600, which is very close to the 14 we've used in the study. I think as soon as you see some resolution around these trade tariffs, I think you'll see metal prices have a fairly sharp upwards movement.
I just have a
Hello there. Yes, hi there. Can you hear me?
Yep.
Yeah. My question is, if I can just talk about Vermelho for a moment. I understand you're going to be using the higher pressure leaching process, the HPAL process for Vermelho. So that's correct. And I was just wondering, have you got any concerns about the time it takes to build a HPAL plant and some of the operational challenges with HPAL? For example, Val is going through. Do you have a target date for when Vermelho might be in production?
So, firstly, we're not going to be going the HPAL route with Vermelho. That was what Vale were going to build out. We will be going the RKEF route with Vermelho, and essentially it'll be a carbon copy of the plant down in Araguaia. On both Araguaia and Vermelho, there is a large limonite resource that you can potentially leach to create nickel sulfate, and we've got test work underway on that at the moment. And in both cases, that limonite resource will have been mined. It will be stockpiled in graded stockpiles on a permitted mine site. So it becomes a very, very low-cost option to produce nickel and cobalt sulfate. And the reality is, if we go down the nickel and nickel cobalt sulfate route, we will most probably bring a partner in to build out the leach route, whichever it may be.
Any time scales on bringing Vermelho into production? I know it's a long way away, but have you got any target dates in mind at the moment?
I think the focus is obviously Araguaia. We are looking at the scenario as well of trucking high-grade ore from Vermelho to Araguaia. That will be within the kind of stage 2 down there. I think it will be the next one to be built out after Araguaia. So if you look at Araguaia in the current time frame, subject to continuous funding, that will be at full commercial production in 2022. Obviously, the next one then would be Vermelho, and that'll be a much quicker lead time because it's more advanced. So that gives you a broad window. But I don't have a detailed timeline at this stage because it could be that we bring a partner in on Vermelho and that actually ends up moving in parallel or not far behind Araguaia.
Okay. Thank you, Jeremy.
No problem.
Jeremy, question about Brazil. There's 1,500 jobs coming their way if the project gets built. There's a lot of tax revenue. Is there any sign that Brazil might offer some kind of incentive to make sure that the project actually gets built?
Good question. I think first of all, this is in the Pará state, which is a mining district, and a lot of revenues are driven from the mines in Carajás. Araguaia is currently the largest project being permitted in the state, so bigger than anything Vale is permitting. It's definitely front and centre in both the environmental and the mines department's sort of window. The tenders have actually been placed by the government for bridge upgrades on the roads around the project, so that's a potential area where we see a capex reduction, and we are definitely starting to see interest from the government in looking at ways of being able to contribute and assist in the development of the project. And there are obviously additional tax breaks that we haven't yet explored. So, yeah, I think there will be ways that the overall economics, whether it's through tax breaks or reductions in capex, that will come from the government.
Yeah, I mean, this is true globally, isn't it? In the United States and the UK, there's a lot of money on offer to encourage industries to invest from outside the country, and that needs to be explored, doesn't it, with regards to Brazil?
Correct.
Hi there, can you hear me?
Yeah.
Just another question about Reuters recently came out with an article about China's Tsingshan and how they're going to be ramping up high-grade nickel. Are you aware of this? And do you have? I mean, I don't expect it's going to be anywhere in the near future, but do you have any sense of the potential impact on the nickel market?
Yeah, so there was an article out in the FT yesterday about basically an HPAL plant that Tsingshan are building in their industrial complex in Indonesia. I think obviously Tsingshan is the largest nickel producer in the world now. They are, I think, very close, if not the largest stainless steel producer in the world, and it makes logical sense for them to also move into the nickel cobalt streams for batteries. I think that plant has the capacity of 50,000 tons of nickel a year. It's not going to ramp up overnight, and if you look at the demand numbers on potential new requirement for nickel in batteries, at the low end it's around 250,000 tons. If you look at the upper end, it's 1 million tons by 2025, 2030. So even at the lower end of the scale, this plant alone does not cover what's going to be required. And
okay.
You've also got the growth. So, yeah, I think I mean, Tsingshan do move very quickly. It's an integrated facility, so it's difficult to work out what the actual costs are for the base nickel versus what the stainless steel comes out at. I think from our point of view, we're going to be producing a Fenny 30, a high-grade ferronickel product, and it won't cross over with their marketplace.
Okay, that's good to know. Yeah, thanks for confirming that. And just a second quick question, going back to the point about sentiment, improving the share price via sentiment. Slightly cheeky question: is there any prospect of any director buying anytime soon?
Yeah, it's an eternal question. This one. We're currently in a closed period, and we seem to spend most of our lives in a closed period between reporting. So
yes.
because we're dual listed, we have to report quarterly, and you're effectively in a closed period up until you release those results. So I am sure when you see a release of those results that there will likely be some director buying.
Oh, brilliant. Thank you very much.
Hi, Jeremy. Hi, Simon. Can you hear me?
Yep.
Yeah. Just a quick question with regards to the test work going on at the moment on the Vermelho samples. Is there any indication how long that sort of takes?
Yeah, so there's two streams of test work underway. One is batch smelt testing on the saprolite to demonstrate that it's amenable for the RKF flow sheet. That is moving along nicely, and the aim is that we have some final results on that in the next 4 to 6 weeks. The cobalt sulfate and nickel sulfate is actually a much longer process because you have to do a whole series of effectively hydroxide or high pressure leach tests. But again, we would like to be in a position to have both sets of results out by the end of the year or kind of mid-December.
Right. Okay. Thank you. And the construction license is expected end of Q4, sort of early Q1.
Yeah. So we're putting a marker out. I mean, we're saying end of Q4 into Q1. The Brazil elections did effectively result in a bit of a slowdown in that process, but we don't see anything out there that is a risk to that timeline. However, you have to kind of have a 360-degree view, so everything is on track. There's no red flags out there, so there's no reason why we shouldn't deliver within that time frame.
No, and the new president of Brazil seems to be pretty pro business, pro mining, etc., doesn't he? So it sort of lends itself there as well.
Yeah, I think that's good all round. I mean, there's no detailed policy out there yet, but everything we've heard is about privatisation, simplifying tax, opening up for imports, opening up areas for mining. His number two was effectively a founding partner of BTG Pactual Bank. So I think it's all positive, but let's see how that rolls out. So far, I think I view that as positive.
Positive, yeah. Thanks for your time.
Okay. Anyone with any further questions? #1 to unmute.
Hello.
Hello.
Hello. Just a question. You may have answered this already, so my apologies. Just looking at your capex funding that you require, can you express that in money terms, how much is required, and what was your preferred method of financing that? And if you had to raise it in equity, what would that be in pound terms?
Well, the total capex, including contingency, as set out in the FS, is $443 million. Of a project of this nature, it's the usual goal to raise as much as possible in debt to minimise dilution to existing shareholders. I think a reasonable target is 60 to 70 based on historic deals that have happened. So we will be targeting the same, but it depends on all sorts of factors that are outside of our control, such as market appetite, Brazil appetite, foreign exchange risk, interest rates in the US. All of those kind of things will play into how much a syndicate of banks is willing to lend on a project such as this. As well as that, you've also got the offtake option where people would pay up front for product for the Feni that we'll be producing, which you can classify that as quasi-debt as well, but it's paid out of product, and you usually wouldn't pay that much interest on it, but it would be a discount to the sales price. So including contingency, we're looking at about 350 million sterling.
Okay. Yeah, you can do it in dollars. Yes, it's fine. Okay.
So $443.
Yeah. So would the amount of, and I'm saying the reason the share price is falling, is that amount of equity in relation to market capitalization of the company seems quite high.
I think it is a standard challenge that any junior mining company faces, and whether you look at whoever it may be. I mean, if you look at Sirius, it was the same hurdle on a much larger scale. If you look at Dalradian in Northern Ireland, I mean, these are a standard challenge that we all face, and it all comes down to we don't want to be raising this money at a low point in the cycle where we currently sit, where all market caps have been reduced by 60 to 70% this year. So what we've tried to allude to is the company is funded. We're not forced into this funding position today, tomorrow. We have runway to ensure that we can explore all the right options whilst looking to build up the value of the company over the next 6 to 8 months as part of that journey.
Okay, well, thank you very much, and the best of luck with your efforts.
Thank you.
Okay, any more?
Hello?
Hello?
Hi there. I'm just wondering, regarding the funding again, is there any possibility of partnering up, so maybe reducing the Araguaia stake as an option for funding?
Yeah, of course. Yep, that is one of the angles that we would be looking at, to bring a strategic partner on board, and that would be done at the project level. The goal or the target structure under that scenario would be to bring someone in. They would earn a controlling stake in the project. We would have to contribute very little, or in a perfect scenario, nothing, and end up with some percentage free carry. That's always an option. Some people who like to have control in these scenarios would prefer that as well.
But I think that is a scenario, but obviously our focus is to build this out and develop this. And as Simon said, it will be one of the scenarios that we look at.
Right. Okay. Have you had any dealings? Have you discussed this with anyone regarding the partnering, or is it too early to? We've
got a number of conversations going on lots of different arenas at any point in time. So the key one of the key drivers on completing the feasibility study and getting it out into the market is that really starts this process in earnest, because that's what people want to see. They want to see the numbers. And until you deliver that feasibility study, you don't really have anything hard to talk around.
Sure. Okay.
And that was, and I'll put this out to the group. And that was one of the challenges that we faced, is that we know it's a tough market. It's not the best market in the world to be putting a feasibility study out, as demonstrated. But equally, if you look at somebody like AsiaMet, who announced a delay in the feasibility study, they were down by a higher degree than we were in terms of where Monday, Tuesday was. So we wanted to move forward. We knew it was a challenging market. We didn't expect the response that we received, but now it's move forward and let's build the value up.
Sure. Okay. Thank you very much. Thank you.
I think the other thing just to note there is that there was a lot of pressure put on you guys to get the feasibility study out because of previous times it was going to be there, and you can't. Probably you would have liked to put it out in a high nickel environment, and that could literally be next week. None of us know. Nickel moves fast, and it's still on an upward path. But you said you were going to put it out in October, and you did. And firstly, I think you should be congratulated for actually getting through all those milestones, and a lot of people don't realise that all of the permitting and all the community work that's been done as well to get to this point, and it really is now just about a final construction permit, and then you've got the feasibility study sitting there, and it's just really then about what's your view on nickel, and the consensus is that it's going to be higher. So I just think personally, congratulations on getting to this point.
No, thank you very much. It's been been a fairly long, hard journey, and as I say, we weren't expecting the response from Monday and Tuesday, but we just dig in and move forwards. And as I say, when the markets do return to some sort of level of normality, you've just got to look back at the M&A transactions over the years. You see the Nevzan transaction in being acquired, and we go back to that transaction where Kaneko was acquired for 850 million. I mean, you have a world-class portfolio of two tier one assets in Horizonte today, 100% owned, totally scalable, and it is a unique situation. We've just got to now really work around marketing and market conditions to realise that value.
Mm. Okay, I think we're nearing the end of the call now, so I don't know if there's any one last question we can take, and then probably we should wrap it up. So, is there anyone who's just itching to ask a last question?
Hi, I was a little bit late to the call, and I just wondered if you meet with your major shareholders regularly, and interact with them and see what they're, obviously given we think Lombard obviously have been selling down, but have you met with them at all?
Yeah, we've seen, so in the last 2 days we've seen everybody. We've got one last meeting tomorrow, but we've spoken to that group. Obviously, we were pretty quick on reacting to that. We've had very good response from all of those groups. A number of those groups have actually been back in the market, and we don't have any negative sentiment from any of those major shareholders.
Okay, thanks, Jeremy.
Okay, well, I think that's probably the last question. So I think we should close out now, Jeremy. So thanks very much for taking the time out for the call.
No, pleasure. Thank you all very much for dialing in. And again, we're happy to run another one of these sessions kind of a bit further down the line.
Okay.
And thanks very much.